Questions from the floor? We'll bring everybody up. Yep.
You want to stand up, Steve?
Yes, I will. Yep. So we'll bring back the team from Midway. Pete, have we still got Leandro on the line?
Yeah, we should.
We'll bring Leandro back up.
So, what was the one from last time, but he's going to broaden that. So.
Terrific.
I don't know how to do that. Anyway, the question's to Pete. You talked about, I'm over here. You talked about, how are you? You talked about the commodity price coming down. You talked about potentially the milk price coming down. Commodity price coming down, milk price coming down. And you've obviously put a lot of effort into lifting prices with the retailer. How do you stop them clawing it back?
It's good. It's a great question. So we've seen from 2010 to 2018. It's a great question. So from 2010 to 2018, there was virtually no. So on an index basis, the value of dairy on the shelf was flat, and of course prior to 2010 it actually dropped. A lot of that was dollar milk. Since 2018. To where we're at today, we've seen a recovery and obviously a significant jump, which is really input-based over the last sort of 18 months. We just need to keep driving innovation and keep the consumer wanting to come back. And what we're seeing at the moment is a real shift. Despite that big 60 billion number I talked about out of home, we're seeing a shift back into grocery, and then within grocery into retailer-owned brand, and within retailer-owned brand, then a real push into Aldi, which is, so that's sort of what we're finding within now. So we just need to keep our brands relevant. We need to promote where we've got competitive advantage around our manufacturing facilities and where we're strong in brand, so we can keep bouncing the price up and down. But there's no doubt that the big thing for all food manufacturers over the next 12 to 18 months is how to drive volume, and so and retain your price. So we just try and be innovative. We try and get good numbers through the store and therefore push our case to retain the value.
Just expanding Paul's question a bit, maybe starting with clay. The 75%, 3% sort of paradox was a good one that you painted, Pete, but Clay might be able to talk about it, that 75% of people want change in sustainability, but 3% want to pay for it. So how do you pass on those costs in your business model at Linsday?
Yeah, thanks Paul. Well, transport, we kind of get measured. It's safety, it's service reliability, and cost. And for us, it's fundamentally comes down to getting our customers' product on the shelf reliably and at a lower cost to enable them to compete and make a margin. So how do we compete in that? I guess it's you just keep focusing on those real basics that you can control around those safety and service metrics, and then we try and get scale in, obviously that helps. And then kind of the value adds for us is that multimodal, so we can be the one solution to customers, whether it be one pallet on rail all the way up to full rail road, and the network aspect of it. And so we try and drive that flexibility, like we've got flexibility, multi-node solutions, but in the end it comes down to getting Pete's product on the shelf in his major retailers at the lowest cost and with the highest reliability we can get it.
But say you've got an extra cost that you have to pass on, say extra cost because you can't go down the route that you want because you have to have more solar panels or something is imposed on you. How do you recover that cost from the customer or supply chain if you've got something imposed on you in the sustainability journey in the next 6-12 months?
Yeah, I can't think of an exact example, like an example of it right now. Regulation is a cost of doing business for us, but we've got the benefits of higher safety. Like when regulation, I'll use that as an example, it's kind of imposed on us. We like it. We want regulation to be higher. We want compliance to be higher because we're a highly compliant and we like regulation because that drives safety and performance. So when that comes through, we actually see it as it creates value. Since that's come in and since we've spent $2 million on the Guardian fatigue and distraction system, our fatal crash, we haven't had a fatal crash since we put it in, and we don't have major incidents are reducing significantly because we can intervene earlier. So the actual return on that investment has been quite significant. So that's what you're looking for, that return on invested capital, I guess.
So maybe across to Midway there. Just how do you, I mean, there's extra costs coming down your supply chain. I mean, it's more of a B2B model, but you've obviously got your sustainability angle coming through with your carbon. So is it a mix?
I guess a big issue for plantations, and I think you'll see it in agriculture too, is the EUDR, the EU's deforestation regulations, which is starting to crack down. So we don't sell anything to Europe, but we sell everything to China and Japan, and they're selling products onto Europe, and they're starting to ask the questions. And it's a really hard question to how can you guarantee that this land, and in our case a plantation, is going to be replanted? And if you can't address that, then surely how are the people in Vietnam getting enough documentation to be able to address it to satisfy the EU requirements? So there's a whole lot of complexity around that and around the pulp and paper supply chain that's coming through with legislation where I don't think anyone knows the answer yet. I just spent last week in Japan talking to all our customers, our Japanese customers, and they just shrug their shoulders and say it's complex and we don't know what the answer is. It's not here yet, and we're just hoping it'll go away. I don't think it will.
Paul, question? Yeah? No? There was a hand up, went up there. Yeah, look, I've recently heard one of our clients reference the fact that some international clients want Australia to do well in this space because there's countries that can't. So it's almost like a shanding. So to say, well, look, we're getting this sort of half right, you guys do it, and the others will when they can. So it's sort of an interesting phenomenon that, a lot's being placed on us as a nation, the rest of the world, and we probably just can't change that.
Is that me? I have a question for Natasha, but the rest of the panel might weigh in on as well. The proposed mandatory climate-related financial reporting, the scope 1, 2 and 3 emissions is kind of part of those requirements, and I think everyone's quite attentive and almost distracted by that, knowing your number, doing the baseline and doing all that work. But there's other moving parts to what's proposed here in terms of companies disclosing what their physical climate risks are, what their risks to a low carbon economy look like, and also doing scenario planning and testing their business models against different warming scenarios. I'm just wondering if you're starting to see, while there's a lot of attention on the emissions and the carbon footprint piece, what sorts of information sets companies might be starting to ask of farmers and supply chains when it comes to the other parts around risk and scenario planning?
Yeah, it's a very good question. And if you think about the Commonwealth Bank as a business and in terms of our agribusiness portfolio, we're banking everything from mum and dad farmer who are farming 500 cattle through to corporate institutions who are represented here today. So it's very difficult to provide a one-size-fits-all solution. So I think firstly, if we talk about first principles from our point of view, we recognise that every producer and every ag business is starting from a different point in time, that every producer and customer will have different and unique goals, and that some will have the capacity and capability to do more than others. But there are two parts to this conversation. The first is mitigation, so adoption of practices that potentially can take cost out, that can boost yield up, that can also enable you to demonstrate your sustainability credentials. But then the other part is what is the adaptation risk here. And so this is why we've partnered with CSIRO to really understand that very deeply across our entire portfolio. You'll see some of this come through in our annual climate report, which will be released in August. We'll have some detailed information about what that's showing in terms of our agribusiness portfolio. But we also want to harness the power of CBR. I mean, there's a fair bit of horsepower under the hood. So, let's actually deploy that for the benefit of our customers and share those insights back with them. So that's really what our Climate Insights report is designed to do. But happy to chat a little bit more about that either in the lunch break or post today.
If I could just comment from the point of view of forestry and pulp and paper industry, you're right, it's enormously complex, and we're dealing with issues, and everyone's got these businesses that are set up to run their business, and then this whole additional layer of complexity is layered in on top. What we're seeing is some really good collaboration within the industries, and I think it's not just our industry, because I've seen other groups where companies are just coming together and saying, all right, so we don't have the resources to do it ourselves, but let's pool resources and access external expertise and do it, and try and do it once for the industry rather than do it for every different business. And it's, as you say, there's an enormous amount of complexity, an enormous amount of risk around the implementation, and I think the only way is to see that increasing collaboration and working with people who are prepared to put some horsepower behind it to help make it simpler.
Any more questions?
Yeah, I've got Kate over here. I'd like to say a quick one before Kate, and then I'll get to Kate. I'm interested in the role of the insurance industry here as well, because in every change that I've seen since I started working in the late 80s, everything starts slow, be it safety, smoking out of the thing, and then all of a sudden the insurance industry jumps onto it, and all of a sudden everyone pays attention. So I'm interested in commenting about how the insurance industry and how that's tracking, and when are they going to lay the hammer down? You can start, Natasha.
Yeah, I'll start if you like. This is very topical. I actually had the benefit of spending some time with Larissa Taylor last week, who started to share some insights about the insurance industry, and we really got this conversation going. There's an enormous amount of publicly available research, forecasting models from our insurers. I think we've got to start reading it and circulating it and sharing it. Sometimes I think some of those reports make for some pretty scary reading. But there's no doubt that insurance is a significant issue for agribusiness, because we don't want a scenario where we're uninsurable. The AFI, and I know we've got representatives of the AFI here today, but the AFI did an excellent piece of work of research last year, which specifically looked at, is Australian agribusiness becoming uninsurable, and what would be the mitigants to that. So it's another piece of research I'd commend. But it's something that we're staring into very deeply, because we want a thriving, successful, profitable and resilient ag sector, and insurance is a critical part of that, to be able to mitigate and manage headwinds as they will inevitably arise.
So on that, an indirect insight into what the insurance industry is thinking, we're managing investments for a large reinsurance company, and they have a very strong interest in ACCUs, or carbon emission offsets, that comes from forestry, so they've got that front of mind. But the other thing that's been really interesting in working with them is that we'll put up a proposal for an investment in an area, and they'll go away and they'll come back and say, no, categorically we're not touching that area. And they've got climate models, and they just say, no, that's too high risk, we're not touching it. And I think we'll see that coming through into areas that you're looking at, and everyone's business will be in one of these models, or in all of these models, where they'll be looking at it and saying, no, the climate risk is too high here, or this is going to be a good area to be in, because they're putting together the data and they're looking at the risks, and that's their business. And that's just, we're seeing a sort of a reflection of that in what we're doing in managing their money.
Yeah, nothing really in our sector yet, other than we watch and wait, but looking for what could be perverse outcomes sometimes coming from that sort of insurance angle. Example, climate change impacts rail more, therefore rail becomes more expensive to insure, driving what would be higher productive, lower carbon freight back on the road. So we're just watching it, but nothing yet, but we watch and wait. By the way, I meant to mention, Pete, your number one dare, the reason it's number one, Lindsay drivers love it. Buy litres and litres of the stuff at your convenience stores. Thanks.
Now and no added sugar too.
Yeah, another question from me, Kate Burke from Think Agri. Or are you going down there first?
No, you're okay.
Keep going. Just wanted to ask about water as an input into farming and the current reviews going on with the Murray-Darling Basin Plan and how you're factoring that into your thinking and your discussions around sustainable farming. And the cycle at the moment is we're at a sort of a high availability in the southern basin and low water price, but that'll change quickly. And if there's going to be less water in the consumptive pool, what's that going to mean?
Do you want that?
Absolutely. So a really significant issue for us in northern Victoria, which has traditionally been the powerhouse of dairy in the country and where my family are from. So we found that the farmers, a lot of the farmers that remain successful up there still own their water. And at a very personal level, I saw some of my family members separate from water a number of years ago, and some stay in it, and it's been devastating for the dairy industry up there. So it's something we continually work on. We spend a lot of time and effort helping farmers with water efficiency, better watering practices, better treatment of the soil, and trying to alleviate that. But in the short, sort of the medium term, I don't think there is a solution other than just try to improve farming practices. I could get into water policy for the next 3 hours, and it's complex. Obviously, disappointing with the water that was taken out of that part of the region recently. Really disappointing. So, but it's definitely an issue in northern Victoria.
From my experience in the cotton industry, just like Pete's saying, it's about efficiency is the one thing that you can control. You can have your input into government policy. You can't have any control over what's happening with how much water's coming down the system. But what water's there, the investment has to be in utilising that as efficiently as possible, maximising the production that you get from every litre of water. And the cotton industry's been fantastic in that with the productivity gains that they've had with genetics and farming practices.
Just from a banking point of view there, Tash, I'll probably just talk on behalf of Commonwealth Bank, but it's very much how banking's gone these days, where really the first conversation you're having with clients existing in you is on their ESG policies. So water is very much part of that conversation. And so we are looking for clients to actually have a strategy. That can be just to have no permit water. That's quite okay. But as long as you've got a strategy and as long as we're discussing it and the implications for the business going forward. So it's just it's about identifying it and putting it on everyone's radar. So in some ways we might be able to help them on the green loan front with transitioning to different farming practices.
Okay, thank you. Mark Frost from Charles Sturt University. I'm probably going to go back 2 or 3 points in the discussion. There's been a lot of talk this morning about the farmer supply chain interaction, and I suppose I'm interested in your thoughts. Like when you look at a sales contract at the moment, there's probably quality indicators, there's quantity in the contract, probably in some industries there's animal welfare, etc. I'm just wondering, do you see in the near future that when you're negotiating the contracts, that there will be a sustainability clause in there around, or do you think it'll become more formal and more mandatory, or do you think it'll sort of still stay on a best endeavour? And the reason I'm interested in that, in my own work, I sort of find that there's nuances between the innovators, the early adopters, the late adopters, etc. Thank you.
Thank you for the question. So I think what we're really focused on at CommBank is supporting those customers that really do want to be at the forefront of this transition, and to recognise and reward them for the heavy lifting that we're doing. And I think the example of that is Stockyard that I showed earlier. But really this is around businesses that want to achieve a number of different aims. So it might be that they want to demonstrate their sustainability credentials internationally. It may be that they want to attract new customers. It may be that they want to diversify their income streams, or it may be a risk management strategy. And I think we've really got to recognise that all of those approaches are valid, but that overarching all, and I made this comment in Toowoomba last week, was that we've got to be able to demonstrate the ROI. And so the key contributor in this conversation is the economics. The economics matter. And so when we can demonstrate the ability to put sustainability credentials next to your brand, when we can put in place a publicly stated position that can galvanise your team to really focus on transition activity, when we can provide discounted finance that enables the trade-off for you to be able to invest in that, when it opens up new income streams, that's when you get adoption. So I think they're really important factors.
Thank you. Thanks, Paul. Tim Gerard from Jandis Henderson. Question for Tony, more on the forestry plantation side. And coming back to the insurance question, one of your forests burns down. How do you sort of guarantee the carbon credits when something like that happens? What's kind of the mechanics for managing that kind of risk, given that you may have promised to your customer that you've got carbon credits?
Yeah, so there's allowances made for catastrophic event like fire under the policy, and there's ways that you need to go back and reset and replant so you can recover your position there. You can also insure, but it's more the best and most likely way of managing it is replanting and going back, resetting the program. And I mean, what we're doing is we need to have a scale where you can have a degree of self-insurance as well as the buffer that's built into the ACCU legislative program. So it's a combination.
Look, sorry, I've just got one more question, and this one's for Pete. I was recently introduced to an Ollie almond latte. I paid a fair bit of money for it, and it didn't taste all that good. Olive oil with almond milk. Apparently Sam Beaton's. Apparently very good for Alzheimer prevention. So that's why I was pursuing it. But Pete, is there? I mean, you've taken a good market share on dairy with sugar content in it. Is there any future thinking around how you make milk more nutritional, that it becomes a real sort of health product? We've taken out fat, skim milk, but putting more nutrition into the milk, or more vitamins in the milk, that actually makes longevity better.
The answer is absolutely yes. So milk's on a sort of a bit of a run at the moment as far as sort of science and nutritional benefits are concerned. So we're finding that two key trends. Just got back from overseas. So sort of the big key trends overseas are protein, gut health, and sort of how it connects with brain health and a whole lot of other functions in the body, calcium, and a lot of things that dairy provides. And so we're seeing a real lift in high protein consumption, not just in straight dairy products, but across all sorts of other ancillary categories. And so milk's playing a large role in that. And so I was enthused to see that the AIS actually have their athletes drinking chocolate milk after training. It's considered the number one recovery drink these days, which is great. But so people are wanting functional benefits, and we're increasing permissibility by lactose-free, which is a really fast-growing area. In fact, we think lactose-free, in many cases, is lactose-free dairy is growing as quickly as plant-based milk in a lot of categories or a lot of channels. We're taking fat out of it, we're taking sugar out of it, we're taking lactose out of it, we're extending protein back into it, extending calcium back into it. So a lot of these offerings and a lot of our growth is coming through through those supplements adding into standard dairy. Dairy is very affordable as a protein and a nutrient, so far more affordable than probably most affordable protein, more affordable than beef certainly. And it's easy to consume on the go, so global consumers are wanting to have food on the go. So whether it's a milk drink or a yogurt on the go, it's fitting into that date or daytime sort of consumption pattern. So we're really excited about dairy. Australians are consuming more dairy. There's growth in dairy demand in Australia and in Southeast Asia as we see the growing middle class. So I think it's really exciting future for dairy. I will just add very quickly, some of the work that's being done in Europe around a number of factors, but one of them is around their approach to sustainability is reducing supply dramatically in a fairly blunt way. I actually think that if we get it right in Australia in this sector, and we have good legislation, we have farmers working together with industry, we have a massive opportunity to fill that gap that's coming out of Europe. I can only see European supply struggling over the next sort of decade or so. I think the US will pick up some of that, but Asia is going to need feeding, and I think Australia has an outstanding opportunity, if we do it in a smart way, to benefit from that.
Good. All right. So good to end on a high there. So I'd like to thank Clay, Pete, Tony and Natasha and Leandro for today's session. Thank you for coming along in your preparation. Terrific session. Thank you.